Hi, James Blacklaw's JB Commercial Finance here. I'm going to give you 3 reasons why your trading business should consider invoice discounting or factoring if this is a product which you have considered in the past. So, a lot of people don't necessarily like invoice discounting and factoring. For those of you who don't know, it is a product that allows a business to raise working capital against its future outstanding invoices. So if you've got outstanding invoices in your business for, let's say, £100,000, instead of waiting for that money to come in after 30, 60, 90 days, you can go to invoice discounting facility and raise 70-80% of that up front, and you pay interest subject normally to a minimum charge on the amount you borrow. So it's quite a flexible facility like that. A lot of businesses don't like it. A lot of businesses in the past have seen it when one of their customers starts an invoice discount facility, that it is almost the death knell to the business. It can be seen as that, and certainly accountants don't like it. But I want to give you 3 reasons, along with the fact that it's now a much better product than it was several years ago, why your business should consider this. So number 1, it allows a business to stand on its own 2 feet. What I mean by that is it allows a business to grow its working capital and bring in cash as fast as its business grows. So if your outstanding debtor book, so the amount that's due to you is £100,000, you can draw down a percentage of that. As I say, depending on sector, credit history, 70-80%. But if your business grows and all of a sudden you're turning over £250,000 for outstanding invoices, you can apply to the factoring or invoice discount company and increase your credit limit and borrow more. There doesn't need to be a restriction on your growth, as there would be with a traditional loan or an overdraft facility. Also, if the business isn't doing as well as you anticipated, then you're invoicing less, you've got less money coming in, and you borrow less, then your charges go down. Now, there will be a minimum charge in there, it's important to know that. But in theory, your business grows as fast or as little as you want it to, and an invoice discounting facility allows you to do that. So that's number 1. Number 2, this kind of facility relies security-wise on the outstanding invoices. It won't require you, beyond personal guarantees possibly, to put any personal security on the line. So if you went to a bank and you wanted to borrow, let's just say £250,000 for your business, chances are, assuming you pass all the credit checks and all the due diligence, they'll say yes, you can have it, but we require a legal charge on your house, which requires you and your partner, wife, husband to go to a solicitor, take independent legal advice, get your house valued, this, that and the other. This kind of facility doesn't do that. Its security is the outstanding debtors. So again, it allows the business to stand on its own 2 feet by using its own outstanding security to support the debt. It requires less from you as a director, personal commitment wise. Incredibly important, especially if you've got 2, 3, 4 directors in a business and they've all got their own personal circumstances, personal situation to consider. Number 3, and this is something which I think has become increasingly flexible in the marketplace over the last 10 years, but generally now with a majority of facilities, certainly with credible providers, you're not committed to a time period. Now in the past, you sign up for an invoice discount facility, excuse the throat, and you'd be committed for a year, 2 years, sometimes even 3 years to that facility. Now, generally, certainly if you want it to be, there is a 30-day notice period, so you can get out very, very quickly and easily. So these kind of facilities can be used, if you don't like them or consider them expensive, as a kind of bridging facility in many ways, to get you to a certain point where your business is profitable enough to actually take out a loan or a mortgage, whatever suits you, to then pay off the facility in total. You're not tied into them forever. Incredibly important to remember that. So there's your 3, and I've got a little bonus one for you as well. So a bonus one is that credit history is less important when it comes to these facilities. Yes, if you've got a director's ban, or yes, if you've had multiple CCJs, of course that's going to have an impact. But your personal credit history and the business credit history is less important than the quality of the debtors you're looking to raise the finance against. So therefore, a client who may be going for a bank overdraft or a bank loan of £50,000, £100,000, whatever it may be, and they've got some adverse history in their background, that's going to be a massive hindering block for them to actually get that facility in place. That's a big red flag to the bank. But it won't necessarily be a problem with regard to an invoice discount facility, because the security is the debtors. And there's been untold examples over the years of people who have had difficulties with their business, had large clients go out of business on them, and it's meant a real difficult personal circumstance for them. And it doesn't necessarily have to be such a problem with invoice discounting. So I hope that's helped. Sorry it's quite a long video for me, but it is a product I'm really keen to shed some light on. So if you want to talk about that further, if you're a professional and have clients who you're trying to put off those kind of facilities, you want to talk to somebody who deals with this stuff every day, please give me a shout. James Blacklaw's JB Commercial Finance. Please like, share, subscribe to this video, depending on which platform you're on, and I hope to hear from you soon. Thanks a lot, bye.